David, I've got a confession to make.
It's not that one about the stag do, is it?
No, we don't talk about that one anymore. I had to go to the office in my Crocs last week.
That's all right. I sent my son to preschool in Crocs, so that's all right.
But I have set a new trend in the office. I do worry. And the reason for it is that I hurt my foot last week and I couldn't actually wear anything other than Crocs. It turned a few heads, but I like to feel I'm a bit of a trendsetter.
I think you turn a few heads whatever you wear, Jack. That's all right.
I'm Jack Watts.
And I'm David Udall.
Welcome to our podcast about agriculture and economics,
which we've shortened to Ag-onomics.
Some might want to call the show Jack and David's Economics,
but the official name is Ag-onomics with David and Jack.
It's episode 5.
And it's all about the Planting and Variety Survey.
An important piece of work as it provides the UK planted area estimates for the upcoming harvest.
And unsurprisingly, the wet weather that we've seen earlier this year has had a massive impact.
Yes, we've seen the dramatic decline in cereals and oilseed rape.
We're down to the lowest level planted for over 2 decades.
And we'll take a look at all the results in more detail.
So let's please follow or subscribe to this podcast to make sure you don't miss an episode.
New shows drop every Wednesday at midday, and please get in touch.
You can comment on any of AHDB's social channels.
Or email us, agonomics@ahdb.org.uk.
Go on, you know you want to.
So on last week's episode, we touched on top performers, and that's been shared a few times. Gareth on LinkedIn says he would encourage anyone interested in agriculture/food production to take a listen. It's been quite an interesting one for me as well. A few conversations with people about debt in farming businesses. And I think there's a bit of a distinction to take there about what is good debt, what is bad debt, and passive debt and active debt. I think there's a whole podcast we could dedicate to that, particularly with interest rates rising and businesses need to be becoming more productive and to grow. So you kind of need a bit of debt, but it needs to be good debt.
And we've had another response from our super fan, Tony Goodger. Either super fan or maybe he's our top stalker, not sure which. He's emailed again, bemoaning the job that Ian Dowie did at his beloved Charlton Athletic. Tony, we've all been there with dodgy managers. And something about courting the attentions of a cougar. I'm not quite sure if we can get away with that story on the podcast, Tony. Maybe that's one for another day. He's really still interested in an episode on livestock markets, and we are going to do it, Tony, but not today, because today we're going to talk about cereals markets. And as ever, we've got a mystery word or phrase that has no right to be in a podcast about agriculture or economics to slip in somewhere. Over the past 4 episodes, we've had the likes of bounce back ability from the legend that was Ian Dowie, but not the Charlton legend of Ian Dowie. Bedfellows, M69, tubular bells, and at least one word that we can't even pronounce. So we're going to forget about that one completely, aren't we, Jack?
Indeed we are.
So today's episode is going to review the outcome and the data from the 2024 Cereals and Oilseeds Planting and Variety Survey. So this is a survey of growers who are asked to submit their intended harvest areas and those that they harvested last year. We collect the data kind of mid-April through to mid-June, and we've had just under 1,200 responses for that, which covers around 5% of the total UK cereals and oilseeds planted area. And that allows us to sort of extrapolate up into the total area for the UK. And we do that across different crops and across different regions as well. And obviously, it's something that has been really focused on over the last probably 9 months. I mean, let's face it, we're pushing even sort of 12 months almost now, really, aren't we, of inclement weather and the impact that that's had upon the area planted and also the condition of the crops. And we are joined in today's episode by Matt Darragh, who is the analyst on our cereals and oilseed side, who has put this survey together. So, Matt, what is the headline figures that we're getting from the survey this year?
Hello. So the title of the analysis that we've got so far for Great Britain, it's the lowest cereals and oilseeds area at 3,223 hectares. So it's a drop on 5% on the year. But from the data that we have, this will be the lowest kind of combined cereals and oilseeds area for Great Britain. And that dates back to sort of 1999. Other headlines include, so we've got wheat area that's fallen 9%, we've got oilseed rate that's fallen 21% on the year, Spring barley has risen 18%. We've got winter barley falling 12%. So overall, our total barley area has risen 6%. And our oat has also risen 9% on the year. But the falls in area for wheat and OSR are what have contributed to that smaller cereals and OSR area in Great Britain, sort of outweighing those small rises in spring crops for our barley and our oats.
So I think first thing to say that this is in some ways a classical wet autumn outcome. Even before that, actually, as we talked about last week when we talked about the Farm Business Survey and now this planting survey, actually really important bits of infrastructure in understanding what's going on in UK agriculture. Some even might say intangible assets of the sector. And what we need to do, let's have a look at the areas. And then in the second part, we'll have a look and see what it means from production outcomes. So as I said, it's in some ways a classical kind of, it's been a wet autumn, and so less wheat area, and that then typically drives that wheat area into spring crops, mainly into spring barley. And the rule of thumb is that of the area that doesn't get planted with wheat, around 80% of that tends to end up in spring barley. But this year, we're actually going to be planting less spring barley than we should have done because of the wet autumn, because we've had this very wet spring. And that's the unusual thing. It's, we've had wet autumns, we've had this last one, we've had what happened at the end of 2019, which was arguably a bit more biblical than what we saw in 2023, depending on where you are. The likes of 2012, 2008, 2001, and then that's me showing my age, so I'm going to stop going back in time talking about wet autumns of years gone past.
So let's focus on the wheat area specifically then, because we were saying there that it's 9% down, Matt, you said. So that takes us from just over 1.7 million hectares in 2023 to about 1.55 this year. I suppose 9% lower is a large drop, but it isn't as large as where we were expecting it to be when we were kind of going through the winter, I suppose, when we're at the worst of the rainfall conditions. And I guess that's because obviously people have, like Jack was saying, not been able to put a larger proportion of spring crops in because of that weather. So some of that wheat crop that previously might have been pulled out of the ground and put other crops in, people have left in, and it's kind of been muddled in as well. And that then comes back to the condition of the crops as well, doesn't it, Matt? Because that's the other thing that we released at the end of last week was our sort of latest crop condition report, which was showing a pretty sorry picture really for the condition of the wheat crop compared to where we've been in previous years.
Yeah, absolutely. So that's exactly what's happened. So over the course of sort of September to May, you sort of mentioned this kind of wet weather, and we've done some analysis, and according to Met Office figures, this has been the wettest on record since 1836. So it's been wet, and it's been wet quite considerably. And what tends to happen in sort of historical wet seasons is we'll see potentially a very wet autumn or a very wet winter, but there might be a bit of better opportunities to plant in the springtime. But what's happened for this season is that it's continued to have higher than average rainfall continuing throughout spring, and it's really hampered the opportunity that farmers had to plant in spring crops. And so many across the UK have had to continue with wheat crops that maybe didn't didn't establish as well as they would have liked to, but they didn't have the opportunity to replant a spring crop in. So they've continued with this wheat crop that was in poorer condition. Conditions have improved since the May report, but on the year they are looking considerably poorer, and that has been impacted by that that considerable rainfall over the autumn and winter period and continuing throughout spring.
So should we look at some of the specifics then, I suppose, the regional figures within that wheat crop, because some of the regions are interesting, and it also goes to show the reflection of the weather, that a lot of that rainfall was really focused in the east of England specifically, and we see that in the figures from Yorkshire and the Humber perspective. We see a 14% drop. East Midlands is 12% drop. Again, we know the Northwest has struggled for a prolonged period with the rainfall of 20% drop. Where we saw the worst of the rainfall conditions, I suppose, there's been that change in area, and that's filtered through in some ways in respect to the barley area, as Jack was saying about, because from that total barley area from Yorkshire and the Humber and East Midlands, they're up 17% and 23%. So we've evidently seen that move from that winter crop into barley and into the spring barleys, but maybe not as much as we were expecting.
For the spring crop for the UK, we've seen that winter barley has fallen 12% on the year, and we've got spring barley rising 18% on the year. And in our early bird survey, we thought this might see a larger spring barley area, but what's happened is that kind of rainfall continued throughout spring, pressuring the opportunity to replant a spring crop, and so many farmers have had to continue on with their winter barley crop regardless of the condition that it was in. So where we're seeing sort of bigger changes in area, we've seen some large changes in eastern England, the southeast, and northwest with winter barley crops down. But for spring barley, we've seen considerable rises in the Yorkshire and Humber areas, East Midlands, and eastern England. And overall, the total barley crop for the UK has risen 6%, just because that spring barley crop has increased to the extent where a loss in winter barley, the increase in spring barley has offset the loss in winter barley. On the year, we're estimating a 6% rise of total barley area for the UK.
And that's fairly typical, isn't it? For, as Matt said, the fact that it didn't stop raining through spring just meant that the expanded barley area didn't get planted in the spring, which is logical from a commercial and a practical point of view.
And then we've seen that knock-on impact in terms of the other crops as well, that from an oats perspective, there's been an increase in the oat area, especially in those areas that have been hit by the wet weather. So East Midlands, for instance, has seen a 38% increase in the oat area from 21 to 29,000 hectares. So we've seen people move to alternative crops, but on the other side, something that has definitely struggled has been the oilseed rape area, again moving significantly lower, with 21% lower than where we were a year ago, and pretty much every region across the board has seen reasonably significant drops in the oilseed rape area. And that's, as the situation's been for, it's a bit of a broken record on rapeseed, isn't it, really? That's not only a combination of the wet weather, that's a combination of the poor crop conditions that creates, and then obviously the struggles with flea beetles and the lack of neonics and the impact on getting crops established. So it just goes to show that, in a kind of quite a sad way, really, that rapeseed is now one of those areas that's just been really taken out in recent years, and it's struggling for any kind of commercial viability because of the risk that it poses for growers.
Yeah, it's absolutely brutal, isn't it? And I think we go back just over 10 years, I suppose, the UK was generating a surplus of oilseed rape to export to Europe. And now we've got this increasingly deep deficit of oilseeds, contributing to the broader deficit of European oilseeds. And yeah, it's sad. It puts real challenge on the balance in the UK arable rotation. It's not surprising, the wet weather plus the huge risk that farmers are going, and clearly in the build up to planting this crop, there just hasn't really been the commercial incentive to be excited about taking a punt on oilseed rape. Let's be blunt about it. And farmers, those that rely on direct payments, for instance, they're shrinking away, and the resilience to grow that crop just isn't there.
Right, let's take a break now to get the latest on the markets. And when we come back with Matt, we'll be discussing, I suppose, what that means in terms of production and market impacts because of those changes in the planting areas.
Hi, I'm Olivia Bonser, Senior Analyst at AHDB, with a look at grain and oilseed markets for the week commencing the 6th of January. Despite some support in wheat markets over the Christmas period, prices have been under pressure in the new year from a strengthening US dollar, technical selling and sluggish global demand. However, Russian wheat crop conditions remain in focus, with warmer than usual temperatures and excess moisture in key growing regions. Persistent hot and dry weather in Argentina is also raising concern over the country's maize crop, which is now in its critical development stage. For rapeseed, new crop prices are supported, with doubts over prospects for global rapeseed production in 2025. Though forecasts of heavy soybean supplies from South America limit any major price increases. Over the next few weeks, weather in major exporting countries such as South America and Russia will be key in driving prices. The USDA will also release updated global supply and demand estimates at the end of this week. To stay up to date with the latest data and analysis across arable, red meat, and dairy markets, head to hdb.org.uk and click on Markets and Prices.
If you're in the market for another podcast to subscribe to, then look no further than our Manager's Special, AHDB's Food and Farming podcast. Recent episodes include a consumer insight offering on red meat labels and supermarket aisles, as well as a dairy special about our work with retailers to promote milk. If you're after herbs, or rather herbal lays, our shelves are stacked with sage advice on how to introduce lucerne and clover into your fields. In fact, we cater for all tastes, so you'll find sections dedicated to all sectors: pork, cereals and oilseeds, dairy, and beef and lamb. And don't forget our middle aisle, where you can often pick up a bargain episode you didn't know you needed to listen to. Search Food and Farming wherever you get your podcasts. AHDB thanks you for your custom.
Welcome back to Agronomics. My name is Jack Watts, and with me today, of course, as always, is David Udall and one of our analysts from the Cereals and Oilseeds team, Matt Darragh. And we are talking about the planting survey outcomes that was published at the beginning of July. And we talked about how all the areas have changed because of all the wet weather. And now we're going to start to talk about, well, what does that mean in terms of likely outcomes this harvest? It's still quite difficult to tell because as at recording, we're still waiting for crops to finish growing. We need some sunshine. I think everyone's had enough of the rain. Even the crops have had enough of the rain. We would like some July-esque weather to just help finish crops off and get us towards harvest.
Yeah, I'd agree, Jack. The weather is the thing. Not only has it been the problem in terms of the planting of the crops and the condition of the crops, we're kind of at that critical stage now where we've had a little bit of rain recently over the last 4 or 5 days, which maybe is all we need now just to kind of finish a crop. And like you said, we kind of need a good period of strong sunshine with some good radiation being built into those crops to kind of finish the yield potential off. And we were talking about areas earlier. And I suppose actually the one benefit for the balance sheet, for the supply element from a wheat perspective, is that area figure maybe slightly higher than where we were thinking earlier in the year, but we would expect that the yields would be impacted from the condition. And I suppose to put that yield impact into context, you mentioned that sort of wet autumn of 2019 leading into 2020. For that harvest 2020, the wheat yield dropped to 7 tonnes per hectare from an average of about 8.1, 8.2. So a significant drop. And we're seeing similar conditions, I suppose, in terms of the condition of the crop overall. So we would anticipate that the yield is going to drop, and evidently that means that there's going to be a lower production cycle. And the market's already anticipating that in a way, though, hasn't it? We've seen that recently with more imports coming in. There's been higher stock carryover. So, the market is very good at preempting what it requires and putting the conditions in place to give people the incentive to do the right thing, as it were.
I think on the yield, it's uncertain. But whilst this is similar to harvest 20 in that we had a really wet autumn and winter, they diverge really, really quickly when we get into spring. So if everyone remembers with some nostalgia of the first lockdown, when we first went into lockdown, it suddenly got really, really sunny and really, really dry for weeks on end from whenever that was. I'm blocking out of my mind. But it was some point in March, and that enabled farmers to crack on and actually get spring crops planted but actually put a huge amount of stress onto crops because it was hot and dry for so long. And so that's what sort of gave that yield outcome of 7.0 from a UK average. You could argue that will we get as low as that? Thinking suggests that we won't. Will we get to the 5-year average of 8.1? I wouldn't have thought so. But within those two goalposts, that gives us a production range of anywhere between 11.7 and 12.6 million tonnes, which is going to be down on last year, but isn't necessarily as distressed as the production was in 2020 because we had both a lower area and a very distressed yield.
And that's an interesting production level there, Jack, that you mentioned, because there was a time, not in the too distant past, where people were talking about a wheat crop that would be below 10 million tonnes because of the planting conditions and because of the weather at that time. If we get something that's approaching that, like you say, up well over 11.5 12 million tonne crop, that's significantly different in terms of the import requirements that we would have, and then the way that the market would move if we move to that kind of level. It puts a different feel on the market, definitely. And the market doesn't move through luck. It isn't serendipity that moves the market. It is built on fact and basis and all of the data and information that it has. So, more information into the market means that it will learn as it goes, and it'll be an interesting period to see where it moves next.
And I think also the other element, you touched on imports, but we've known the market has been essentially encouraging storekeepers, farmers to actually put grain into long-term storage. Those big cash carries in the marketplace, because there's too much grain in the near term and depressing the near-term price. And we know that in the future we're going to be more of an import situation, and so that's created premium to keep grain in store. So and that all tells us that actually the stocks are going to be higher. So from essentially as at June, the latest balance sheet forecast that commercial end season stocks are going to be around 3 million tonnes. If we contrast that from a year earlier, that's up by I think a third where it was, and actually is higher than where we were this time in 2020 after we had all that weather and we'd had another reduced area. So then that was just under 2.5 million tonnes. So we've got an extra 500,000 tonne stock versus where we were this point in 2020. The area is higher. I would suggest that yield prospects look better because we've not distressed. People are probably going to shoot me for saying it, depending on the sunshine. We're not going to see. I don't even think we'll get over an average yield in my view, simply because we've got big holes in field. We've got those because there was no remedial action, as Matt was saying, and so we've got big holes in fields, and that will just dilute the national yield.
I'd agree with that. When you say big holes in fields, I flew to Scotland last week. I know it's not very good from a carbon footprint. I'm not going to. That's a different conversation. But you could see it from the air. You could see that the patchiness in crops, and that isn't just from a wheat perspective. That was all crops. There was obviously some very good looking crops as well. Some very good spring crops, some spring barley crops, some fantastic looking spring oat crops, but some very patchy oilseed rape as well. So it's going to be really difficult, I think, through that early harvest period to be able to ascertain what an average yield is, because there is going to be a significant variability that we see. So, let's not jump about in panic or celebration at those early yields that come through, because I think as that harvest progresses north, and especially when it kind of hits those areas where we've seen the worst of the weather impacts in the east of England, again, that kind of Nottinghamshire, Lincolnshire, going up into South Yorkshire kind of area, I think that's where we're going to see a big level of variation for the yield that comes through.
Yeah, absolutely. I mean, I've been to a few crop trials recently. I saw some at Groundswell, definitely saw some at the cereals event, and also went to an NFU crops trials event. And unfortunately, at some of those events, you can see some crop stress coming through. I think particularly at the NFU crop trials event, it had unfortunately failed. And although it's a shame that we've got crop trials that are failing across the UK, it's also very reflective of what many people are having on their own farms. So unfortunately, maybe we're not getting as much information about new varieties that are coming through. I think unfortunately it's quite reflective of what's happening on many farmers' fields throughout the UK. And I think you touched on a point there of imports. I think what we've seen from the HMRC import data is we've seen sort of the average sort of wheat import pace of 180 kilotons on the month since the start of the marketing year. And since 2024, it's kind of exceeded the pace of the 5-year average and last year's pace. So, and we can see that kind of import pace continuing throughout into the next marketing year based off of smaller wheat area and wheat crop. I think we saw in April the UK flour millers forecasting a smaller UK bread making crop at just over 2 million tonnes, which is 38% smaller than 2023, which would increase that kind of reliance on imports. And you also mentioned there is that pressure not only being faced in the UK, but also in other regions within Northwest Europe. And I think some of that's being felt in prices. So we've seen that Poland's been pricing wheat more competitively within the market, and we have seen increased wheat imports from Poland, breaking sort of historical averages alongside elevated German imports of wheat.
Thank you, Matt. Thank you, Jack, as ever. That was it's one of those things with the planting survey where it really sets the scene for the marketing year ahead, and there's still a lot to think about. Maybe slightly larger area for wheat, probably put some questions around the import levels coming in. Have we had too strong imports recently? Do we need to carry over all that wheat if the crop production is maybe slightly higher than we thought? So yeah, it's a very difficult time. And I think our advice to growers at this point, as ever, is to continually monitor the market. It's the best way to gather that information and keep that narrative going. So that's the main content for this week. But Jack, I've got a question for you. Did you manage to get your mystery word in there?
I think I've guessed your mystery word.
Did you? I honestly didn't get yours at all. Go on then, what do you think?
Was it serendipity?
Yes!
Yes! Woo!
I was genuinely panicking about getting that in. I honestly didn't get yours at all. Matt, did you get Jack's mystery word?
I'm sorry, no, I can't help you there.
It was intangible assets, which is a bit misleading because it's 2 words.
Come on. Surely we're allowed to get out there if it's 2 words. This is where we need a podcast VAR to check this kind of stuff, isn't it? Well, thank you. That was everything for today. If you want to email in with your own choice of office footwear to rival Jack's Crocs, please send them to agonomics@ahdb.org.uk. As ever, new material will be released every midday on a Wednesday. We look forward to hearing your comments, and if there's anything you feel you want us to cover, then please let us know.